And we're live. That awkward moment where you stare at the camera and wonder whether it's live is over. Luke Harvard from dwarfs.io. Welcome to the show, man.
Thanks for having me.
Yeah, my pleasure. So in a minute, we're going to go into our sort of live podcast recording. So we'll just chit chat for a couple of minutes to see who comes along and wants to watch live. So Luke, where are you coming to us from today?
Wiesbaden, Germany.
Excellent. So you got that European angle, but I hear a British accent, so I'm assuming that you're originally from the UK.
Yes, I am. Yeah, I'm from a quaint little place called Hereford. You may have heard of it. Very quaint for the SAS and Strongbow cider. Put the two together on a Friday night, you can have a lot of trouble.
Yeah, for anyone who doesn't know, the SAS is the special they're the equivalent of the Navy SEALs, I guess, aren't they? Sort of in the US or something. So, but they, it's Hereford's a very sleepy little market town that goes completely mad on a Friday night because they got some rather more testosterone fueled people than the average market town. Yeah. Absolutely, yeah.
And then you got a lot of farmers who are very, very big and testosterone filled too. So. Yeah, you've got a lot of egos running around, but I was obviously not one of those egos.
Absolutely. So you ended up in Germany, and today we're going to talk about the European angle of things. So Dwarfs.io is yet another e-commerce business aggregator, and there seems to be one born every second at the moment. But you guys have got a really different angle, I think, because I know one of your founders, Boz, who is a lovely Dutch guy. So you got that European take on things, which is quite different from the UK and US based ones. So that's the subject for today. Excited to talk about that. So I think without further ado, I'll just say hello to anyone who's watching us live or in the replay. If you are watching live or on the replay, feel free to put comments in and any questions you got for Luke or any thoughts about this. And Luke or I can respond. Probably won't do it during the actual podcast piece, but we'll wrap up at the end of the live. And then after the live, if you got any questions, we'll answer them as well in the Facebook group. So what I'm trying to say is, if you've got any questions, do ask them and we will get them answered. So without further ado, let's do the actual podcast piece. I've got my one of my favorite mugs here, by the way. Just this is completely irrelevant. While we were just waiting, it says, "Where's the Control Z for my life?" I like this mug a lot because when you're live, there is no Control Z. So we're going to do this live without a safety net and no editing possible. So let's do this thing. Ladles and jelly spoons, boys and girls, welcome to the 10K Collective podcast, the place to be for 6, 7 and 8 figure Amazon sellers. And I guess I should say more broadly, e-commerce sellers as we get into 2021 and have to think bigger than just Amazon as the water gets hotter. So today I've got a warm welcome for a special guest, Luke Harvard from Dwarfs.io. Dwarfs.io is a very interesting, it's a small fund based in Holland. Like many other people, they're acquiring e-commerce businesses, but they specialize in non-Amazon marketplaces and Europe, which I think is a very, very interesting area. So welcome to the show, first of all. Thanks so much for coming on.
Yeah, thanks for having me, Michael.
That's great. So we were just talking before we went into the podcast recording about where you're based. So you're in Germany, is that right?
Yeah, I'm in Wiesbaden, Germany. It's about 15 minutes drive from Frankfurt.
Excellent. But we hear your dulcet British tones.
Yeah.
So obviously you have that European angle as well as a UK understanding. So that's a great starting point. I've also lived in Germany as it happens. So we've already got a bit more of an international angle, which is great. Yeah. So let's talk about this then. So our whole thrust, we've got a couple of episodes hopefully to come, but we're going to talk about building a sellable e-commerce business. And the sellable piece is important because you guys specialize in acquiring them. So that's the other side. But focused on the UK and European marketplaces that aren't Amazon.
Yep.
So tell me a little bit about why this is even worth considering for people. I mean, people say, Amazon's got whatever, is it 50%, 60% of e-commerce, depending which country. Yeah. Why even bother looking outside of Amazon right now?
Well, I think if something is already working on Amazon, then you'd be, I think, foolish not to kind of, take some of those eggs out of that basket and maybe put them into other baskets and at least explore that, because there are other marketplaces, smaller marketplaces, and of course your own web shop that could be underutilized right now. So I would always recommend that, we no one knows what the future is going to hold. Obviously, Amazon, it's its own animal and it does what it wants and it's changing things all of the time. And so there's no guarantee that they can't just change, something, and your listing gets dropped off the face of the earth, or they decide to just, you've done something really special with your product and they like it better, and they're gonna, take it and do it themselves. And so there are other platforms. One of the ones that we really prefer is bol.com. In Holland, they would call it the little brother of Amazon, and it's small. I believe it's about 7 billion euro turnover on Bol. So it's really small in comparison to Amazon revenue. But, the number of sellers on Bol are significantly less. And I would say they are currently, it's not necessarily a new platform, but it's a lot newer in terms of selling as an individual seller. So I think it's a big opportunity if you've already got a proven product that is selling like hotcakes on Amazon, to then maybe transition onto Bol as well. And there's a potential there that, if you're one of the few sellers on there selling your type of product, that you could do extremely well very quickly. So I think there's, it's a big opportunity really, and not many people are talking about it or thinking about it.
Yeah. Totally agree with that. Yeah. I mean, I think that the fact that it's not talked about that much is surprising to me, given how desperate people are to escape over competitive markets. There's a lack of imagination that I don't know, or people just never heard of it maybe. So that's why I'm glad to, break the secret, if you like. So by the way, just to put things in context, 7 billion euros is about 8.9 billion US dollars, according to what my detailed research, i.e. quick Google just now. So 9 billion US dollars. Now, to put that in context, I mean, Amazon UK in 2020, which was a ridiculous year, had 26 billion in revenue, which is huge. But 2019 was about 17 billion. So it's actually not that tiny. I mean, it's not as big as Amazon UK, but that is one of the biggest marketplaces. So it's, however, and it comes to something when we see 7 billion as a small amount of money. That's quite funny. Or 7 billion euros, 9 billion US dollars, whatever that is in pounds, 6 billion, whatever it is. But in other words, it's not a titchy, tiny, ridiculous opportunity. It's actually pretty substantial. And I have to say that my experience at bol.com, and be interested to get your take on it. And if we take nothing else away except bol.com is a thing, then I think we've served people very well, because I've got a client I'm working with at the moment who's selling stuff on bol.com. When he told me what he was selling, I kind of almost had a heart attack, because if any of my clients had said who sell on Amazon, even in the last 5 years, had said they were selling this sort of thing, I would have just been so anxious that the Chinese were just going to rip the price out of the market and they would make no profits. And he's been killing it. So that's an example of the fact that for me, bol.com feels like where Amazon.com was maybe 2013. I mean, it's incredibly lower competition compared to that. I mean, what's your experience? Are your clients experiencing the same kinds of things?
Yeah, I mean, so some of the other partners in the fund, that I would consider them to be bol.com experts, super sellers. They've sold a lot of product on Bol, and I mean, it's just far less sophisticated, and it's, like you said, when people were selling products which you'd say that's just too there's too many people selling that product at the moment on Amazon, the kind of quantity on Bol is significantly less. So to a certain extent, I wouldn't say that you don't have to kind of think with Bol, but it gives you a lot less, gives you a lot more room for error, especially. But I think if you've already done a really good product on Amazon and you've proven it, then I think it's going to be a game changer if you shift it over to Bol. I think there's a potential there it could fly. I mean, one thing you have to take into consideration is that from Amazon.com, the US, to Europe, there's a big difference, I find. I would say, and for all those listening, with all due respect, there's a different sophistication in terms of what people want in Europe. Certain products in the US just won't, people are not interested on some of the European marketplaces. So I do think you have to take that into consideration. If you're in the US right now and selling in the US and something's selling really well, it might not translate to the European market. But with that said, I think there's a lot more opportunity. So potentially, if you have something that's selling in the US, if there's no one else selling in Europe, it could be a blue ocean for you, really. And that's just one platform. I mean, that's the one that we would say to invest your energy and time in. But there's lots of other platforms, and I think also it should be said that you should be investing in your own web shop. For us, we're looking, a home run where we see a business which is what we consider really valuable and really attractive is one that has multiple different channels, and not necessarily that they're mature right now, that they've proven that it works, and maybe they're starting to ramp up. So let's say, for example, they started on Amazon, any of the Amazons really, but for us it would be Europe or UK, but they've just tested the water with their own web shop or say another marketplace. Then that kind of says to us, it definitely works there, and it gives us some room to then obviously take over and start to scale that. So that's what we're really looking for.
Interesting. So it sounds like a few things to reflect on. First of all, different types of products may work in Europe to US because of I guess what you're saying is consumer sophistication is a bit different. And, I guess that sounds a bit judgmental, but I guess it just does work in a different way. I mean, there's something about American consumers are very kind of generous and a little bit forgiving. Certainly, in my experience, the UK is not that dissimilar, but Germans do not consume in the same way. They need stuff to be very well engineered, and we all, if you've sold it for 5 minutes in Germany, you'll know about the Germans. But what's interesting is what you're saying then, to sort of slightly flip topic, I suppose, is you're talking about what makes a business attractive. Now, obviously, different buyers are looking for different things, but what you guys are looking for is, it sounds like, what's the word? A sort of solid start in a channel or multiple channels, but not necessarily fully fledged, because I guess as an acquirer, you're buying the future potential growth, right? So tell me a bit more about that, because obviously this is really, I guess we're probably hitting some people with a sort of triple whammy of how to make your business more sellable. But I guess that's talked about a lot, but really critical. I'm never going to apologize for making that conversation the focus of the podcast these days. But also Europe, it's a thing. Bol.com is a thing, but also then we're talking about different marketplaces. So from the sort of sellability point of view, what makes a business that has exposure to what look to Americanize potentially very small markets, but multiple ones of them, more attractive to you than one is just big on Amazon.com? Why is that more profitable for you guys?
Well, look,
or is it indeed?
For us, I mean, the one thing that we're seeing over here in Europe is that, for example, if they're sellers, that are selling in Holland right now, the Netherlands, and they're based there, there's a tendency not to necessarily venture out of the country that they start in. They may venture into other markets, but what we're seeing is that people, they kind of run into these hurdles, or even it's hurdles in their own mind where they don't even explore different marketplaces because of the perceived, barriers to entry. And there are barriers to entry. There are things you have to navigate, especially in the German market. It is more complicated. They require, different hoops that you must jump through. And, what we see is sellers just say, I haven't got the bandwidth, I haven't got the time, I just don't want the complexity, and they won't enter. So for us, we see big opportunities where, maybe someone's selling. I spoke to one seller, they were selling in Italy and Spain, but they weren't selling in the UK or Germany because of the different VAT situations. Sometimes it requires you to have, maybe you set up a new bank account, set up, a new company or something like that. So people just avoid all these different things and they limit themselves really. And I think it's, I want to encourage people not to be scared off by some of those barriers. In fact, they can be an opportunity for you if because you're probably not the only one who's feeling overwhelmed by some of these things. And so don't let it overwhelm you. Just, I think, take one step at a time. But I always would suggest to, if you can and it makes sense, and obviously the product translates to different marketplaces, to expand into those different markets and then to different platforms like Bol and whatever else you're looking at, and to have a real strategy about it. Because I think what we see oftentimes is people, they find something that works and they keep doing that, and they don't kind of step back and say, what could happen in the future? Is Amazon still going to be, the way it is in the next 2 years? It's very unlikely. It's highly unlikely. It's going to change. It's changing all the time. Will there be new sellers coming in? Will there be more hijackers? Will there be more competition? Will that particular niche be completely oversaturated? It's likely. So you really need to kind of think about, well, what other Amazon marketplaces might be a good option for you? Because sometimes we're seeing that, say, for example, something's getting a little bit saturated in the UK, in say Holland or Italy or Spain or France. It's not. It's still like an open market, and there's plenty of room to sell there. And some markets really like a product and are very, they're very uncomplicated themselves. Whereas we've seen other sellers selling in Germany, and they really struggled. They got lots of kind of, they got asked for returns, or they got a lot of hassle from their customers, and not necessarily because it was a bad product, just because that's the German consumer. But in Italy, they had zero, problems. It seemed to just, go very smoothly. So it's just kind of looking at where there are kind of opportunities and taking advantage of them, because those windows won't be open forever. So I would encourage everybody to just sort of explore as many of those opportunities as possible, really.
Yeah. I mean, I guess what you flagged up is really the reasons people don't, which is the barriers to entry and bandwidth. And I think they're slightly different things, aren't they? So I think I'd split those up. But one thing I'd just want to ask you about is I always perceive there's a difference between a barrier to entry, which once you've jumped, everything's fine on the other side, versus things are going to be continuous hassle, which is obviously, when it comes to the bandwidth of continue to operate as opposed to enter a market is a different thing, right? So what's your experience of that? I mean, once Germany's famously, got to get you jump through a few hoops to VAT register and so forth. Is your experience with companies, let's say we take a UK based company, I'd imagine you'd have some of those guys on that you talk to, and they are wanting to expand to Germany. What's your experience that once they have jumped through the hoops of getting registered, that it's all plain sailing? Or is it kind of continuous hassle? I mean, it's a bit of a general question, but let's try and address that.
I think it depends on the seller. It depends on, again, their ability to, operate a business. Because let's be honest, some people are really good at starting and launching a product. They're great at the start, but their strength is not necessarily in operations or scaling or team. Or fulfillment, and they would openly admit that, and that's fine, because we all have our areas of strengths. I mean, within Dwarfs, we have multiple different areas of the business, because we're not all the same. We all have different skill sets. So I'm on the the acquisition side. I'm not in integration. So I don't integrate the business. I don't operate those businesses. That's not my bag. And so for a seller to be able to do all these different areas, it's a lot of work. It's overwhelming for everybody. So, and I find that oftentimes most sellers are maybe, maybe an individual, or maybe they're a family business. So they haven't got, unlimited bandwidth. And at some point they're going to hit a ceiling of their capability and their time and maybe their resources. And one of the biggest ones we're seeing constantly is cash flow. So with the more, I guess the gift of Amazon is you can scale quite quickly if you really find a product that really works well. The curse of that is that now you've got to scale that. Now you've got potentially issues with lead time and fulfillment and stock and being able to pay for all that stock. So if you want to really scale, you're gonna have to buy a lot of stock and you have to put a lot of capital into that. So it's very capital intensive. What we see is a lot of people, their profitability goes down when they start to scale, and things become less fun. What started off as something that you enjoyed, maybe it was a passion project for you, and then it kind of evolved into a business, and now it's becoming like a bit of a machine, and you're not really enjoying it so much. So what we say to sellers is, listen, we get it. We've all been where you've been, and fortunately, we figured a few things out on the way. Some of the founders have, built and scaled like multiple 8-figure businesses. So we get those kind of hurdles when you're going from 6 figures to 7 figures, and then, from 7 figures and upwards. And so we've got the team in place, and we've figured out, how to, overcome some of those challenges. Whereas some sellers, they haven't got that time, for themselves in terms of their own personal bandwidth. It's taken its toll on them. They're feeling the kind of pressure, and sometimes it's time to move on. And sometimes it's a case of they wouldn't necessarily want to move on straight away. So maybe for some sellers, they do want to cash out their chips and they want to sell, and they'd like to get a nice lump sum and kind of walk away from their business, and that's fine if that's what they're looking for. But others, they say, look, I still enjoy this business, but I don't enjoy the things I don't enjoy. I'm not, I'm not having fun when it comes to cash flow and fulfillment and dealing with suppliers and all that other stuff, and dealing with Amazon in itself, or even thinking about expanding into different platforms that I've never heard of. And so they say, look, I don't want to cash out all my chips, but I'd like to sell a majority of the business, and I'd like to kind of have, say, an earn out and get a piece of the upside that you guys are able to create over the next few years. And we're flexible, and we're able to kind of facilitate that for people and take over the thing that they don't enjoy. So I think that's what we're seeing more often than not. There are people who are built to scale businesses, and you've got it in their genes. Maybe they've already started multiple businesses before, and this is not new for them, and they're like, yeah, it's a different sector. Maybe they weren't in e-commerce before that. And you mentioned someone before we went on air, I think, who's been in business since 1999. I mean, some people have been doing business for years, and this is like a walk in the park. For others, it's really, really hard, and we get it. So.
Okay, so tell me about, what are the sorts of things then? So I guess you guys just buy businesses, and that can be one of the things that a business owner can frankly hit the point where the next steps that the business needs are going to either require skill sets they don't have, or even a mindset, I guess, that it just isn't them, or cash, funding that they just haven't got.
Yep.
So that's one option. But tell me a bit more about this, the sort of thing where somebody might stay on in the business, but take you guys on as some kind of partner. I suppose it sounds like what's potential on offer, and this is what I want to dig into, is a mixture of sort of operations, taking over some of the operations side that people often aren't so good at, the really awkward stuff, fulfillment, suppliers, cash flow, all the unfun stuff, and then also own some of the business but not take the whole thing over. Is that right? I mean, what sort of deals do you end up doing with business owners?
Yeah, so we've got a couple of different ways we can work with sellers. I mean, when we talk about aggregators, we wouldn't consider ourselves like we don't have a cookie cutter agreement or kind of offer template. We have kind of valuation models that we use like everybody, but at the same time, we try to figure out, look, every business has problems. Every business has their kind of weak areas. And everybody is different. So every seller has, unique needs, wants, desires. And so we're trying to kind of figure out how can we make those work. And sometimes it won't work for people. We can't please everybody. And, that's just kind of how things go. But in other occasions, we understand that someone doesn't want to just sell out right now, and they don't want to sell the business. But for example, we're talking to some sellers who are bigger than our usual kind of range. And our usual range would be probably between $500,000 in revenue to sort of 5 million in revenue, and that would be like euros or pound sterling. But say, for example, someone was more established and they were already doing 8 figures, but they are hitting those same hurdles themselves, and they realize that they have this ceiling of capability, and they would be interested in selling at some point in the future, but they wouldn't want to cash out right now because they realize there's a lot more potential. So what we are looking at doing currently with a few different sellers who are in that position is to say, let's kind of partner. Maybe it's some kind of a partnership with an aim to do an exit to us, or maybe it's some kind of a merger. And we're very flexible on how that looks, and we don't have a set formula as such for how that looks, because every single situation we're currently looking at is very different. Really different, in fact, So we're really trying to kind of flow with it a little bit and understand, well, where can we bring a lot of value? If we can't, then there's no point in really entering that conversation. But if we can, then we say, look, well, we know for sure we can do this. We've looked at your COGS. We understand where there is room for, to reduce cost, to increase your margins, to, increase your volume, but without decreasing your cash flow. we really think we can make a significant impact here. You're really good at marketing and really good at, launching new products. So if you want to continue doing that, then we'd like to kind of empower you to do so. But we think we can really make a big impact in terms of your back end and just kind of allowing that to scale and bringing in, team resource and operations, etc. And so we're looking to do that with those types of sellers. So I think that's quite unique, really, because it's not a typical kind of buyout model. It's really coming in a little bit earlier. It's not necessarily an investor kind of role where we're just putting in some cash for 20% equity. We were looking for a more substantial kind of, I guess, partnership, and there is the understanding that there will be some kind of full exit in the near future. But we're saying, look, for the time being, let's kind of let you hold on to some of the things that you do really, really well, because it would be foolish for us to kind of remove you. And those sellers, they know what they're sitting on. They're not smart. They're not stupid. They understand the value that they have right now, but they also understand their areas of weakness, and that's I think that's a real asset for a seller to admit where you're not strong.
100%. Yeah, I think just generally, it's interesting that what you were saying earlier about reasons why you might consider moving off Amazon is really not just looking at the opportunity, which is such a sort of there's got to be an optimism about entrepreneurs, otherwise we wouldn't be mad enough to try and do what we do. But I think sometimes when you look at the risk profile of what you're doing, when I say what you're doing, I mean as an activity as a whole, if you compare it to, say, putting your money into property or just putting it into a mutual fund or something, it is high risk. So we sometimes need to look the risk in the face and go, okay, so how do I de-risk the business? So that's one thing. And I guess then the willingness to look at your business and the models and the platforms you're on and see the risks and do something about them. Similarly, you asking people to be realistic about looking in the mirror and going, okay, so actually I'm not good at sourcing. I thought I was, but when I look at, what other people are doing in my space, I'm not. So being real about that. But it sounds like what you're offering is effectively a blend between, you can buy a whole business, but for the bigger businesses, not so much a passive investor, but in between a sort of partnership investor, which I think for the right business could be really attractive. Now, obviously, if you were dealing with some frightening faceless entity, that might be the worst thing in the world to do. But tell us a bit more about, we ought to give you a chance to tell us a bit about, you're hinting already about what dwarfs can do for people. So how does the sort of typical deal work with you guys, and how do people find out more about it?
Yeah, so again, if we're looking at more of a typical deal, although we don't have a cookie cutter template, it would be something like 70% cash at close, and we like those types of deals because, quite honestly, we want to work with sellers that are motivated. They understand their business has a lot more potential. So if someone's looking to cut and run, that's a little bit of a red flag for us sometimes. Not necessarily always, but we're kind of, why are you so eager to get out? If you believe in the future of your business, then why wouldn't you want to, get some of the upside that's created? Because if we're bringing in that capability, we only want to acquire businesses we really believe we can, scale significantly, by a lot. So if we make an offer on a business, we're confident we can. We know we've really done our homework. And so for that reason, if someone is to, have some kind of an earnout of, and they have, say, 30% over a couple of years or a year, whatever the terms are, then they're gonna benefit from that rather than just taking all that cash at close. And so we really look for those types of entrepreneurs who are like, yeah, absolutely. I'm confident. I'm talking to someone at the moment. They're doing 100% year on year. It's like, great. Well, if we could, do even more than 100% in the next couple of years, then that would be for us. It would have to be a lot more than that if we're going to be interested. Then you're going to benefit significantly from doing a deal where you get an earnout structure. There have been some deals where we have looked at more like I think 90-95% at close, but for the most part, we're really looking at deals where we can share in the risk and the reward. And we're fair. We're not trying to kind of give anyone a valuation that's lower than market value. So we pay fair market value, but we're not. And this is just being very honest here and candid. One of the key reasons we're focused on UK and Europe right now is because I think that the market in the US it's becoming a bubble. Quite honestly, everything's in a bubble right now. I think I've heard a few different investors from different sectors saying this, whether it be the stock market, the crypto market, the real estate market, and private equity, venture capital. Everything's in a bit of a bubble. So the US right now is getting pretty overvalued. And I think it's because there's so much money and there are, so much competition. We're not really interested in, overpaying and just sort of trying to outbid each other for different businesses. We'd rather, for us, our model is we prefer a smaller quantity of really, really high quality businesses. So we will say no to far too many businesses that I think, I'd love to say yes to them, but we've got high standards, and we don't want to compromise on our standards, so we stick to our particular sector and the niches that we like. And even if there's a great business in a category that we're not investing in, we'd unfortunately pass on it and say, look, you'd probably be a better fit for someone else in the market, and all the best. So that may change in the future, but for the moment we're being very, very selective. And I think that will work, and it will pay dividends for the sellers that we're working with.
Yeah, well, if nothing else, if you know that somebody's selective, and I guess lots of people say that, but you can kind of judge by their actions really more than anything else. But, a smaller sort of boutique fund, if you like, which doesn't mean that they're not well funded in terms of relative to the numbers of businesses they're buying. As long as each individual business is well capitalized, then that's what counts, right? So as long as there's enough money for stock, broadly speaking, is the big barrier. Then that does make sense to me. And I'd rather partner every time with a small company that is well run, which is adequately funded, but isn't trying to gobble the internet. Because that as you say, what happens with that, it may sound attractive, but I mean, I'd be very wary, because if there's, as you say, as an investor, I'd be like, why do you want to cut and run? Why don't you want an earn out? But equally, as the seller of the business, I'd be like, I don't want to link my future wealth to anything but the most competent team, and therefore I want them to be selective. I want them to be fussy. I want them to go over my financials with a fine-tooth comb, because that means they're doing it to everybody else and being, selective and applying their expertise in a very focused way. And I think you guys are very right about this bubble. I mean, even in my, sort of from my podcast chair, the number of aggregators from the US that have been in touch the last few months on emails, basically a new one a week for a while. And that's kind of a sign that, and I don't run like the biggest podcast in the world, but they have the right kind of audience for them. And, that's a bit of a hint. And then when you talk to them and you kind of dig a bit into their model, some of them aren't particularly clear off camera about what their model even is and what they are looking for. They're kind of looking for, an Amazon business with a pulse, and that worries me. So talking of which, then let's talk about your checklist so people know they've got a business out there. What is it you're looking for in the businesses that you would potentially acquire? And then we should talk about how people actually reach out to you as well. So let's go through that checklist first.
Yep. I'm actually just scrolling through it right now.
Yeah, we got our list in front of us here.
Yep.
Putting you on the spot here.
Yep. So, for us, again, we're primarily focused on the UK and Europe. And I see a lot of really great American businesses, and it hurts me to say no to them, but we're trying to be very, very strict at the moment. And I think there's enough opportunity in the UK and Europe, especially in parts of Europe like that, where they're only selling on one marketplace, like Italy or France or Spain or the Netherlands or Germany. Like Germany's a huge marketplace, and that gives us a lot of opportunity to be very selective. And what we're finding is that there is less competition here. The larger aggregators, they're only interested in businesses with like 1 million in EBITDA, and we're really focused on smaller businesses. So, the categories we're looking at, I mean, this is not necessarily uncommon, but we're very, very good in these categories, like very good. We've got some of the members of Dwarfs who've got some very significant businesses in these categories. So bedroom, home, kitchen, garden, so all around the house and things like that. And then sports and outdoors, and camping. We really love those sectors, and I think it's actually really doing well because of the pandemic, and I think it will continue to do well for the next few years. So we like those areas that we avoid a lot, really, which again is unfortunate because there are some great businesses in these areas, but apparel and groceries, supplements, we just can't work with those. Too many variants, too many risks, too many moving parts, and we try to avoid those areas. Makeup, creams, lotions, potions, we avoid those as well at the moment. So we're kind of avoiding the beauty area too. And then electronics and toys. We just, anything that's got, parts or things that can easily snap or break or any electrical issues. Yeah, we avoid those. So when I see a lot of these great businesses, I have, all the brokers are sending me through opportunities, and I keep telling them, yeah, that doesn't match. We've already given you that criteria, but they send it anyway.
Yeah.
We just have to keep saying no. Yeah. It's not our bag.
This is, by the way, I would be very happy if I were in the selling seat of a business and I were approaching somebody and they said no a lot. That shows that if they say yes, they're serious. I think if people say yes to everything, you should be very worried. And it's counterintuitive, isn't it? If a salesman says yes to everything, they're primarily a salesman. If they say no to everything, they're thinking about a match between the entity being sold and the expertise that is on offer and what they're looking for. So I think that's actually very reassuring, and it's very clear as well. So basically, if you're an American listening, if you sell in Europe, then great. And if you sell only on Amazon.com, this isn't going to be for you. But you should think about why that is. I mean, America's in a bubble. Like, that's not actually a good thing unless you sell now. If you've got an earn out with it, that could be a risk. I would suggest if you've got an American-based businesses, the multiples you're getting right now, get the cash and run. Like, it's not going to be pretty. I'm just saying it's exaggerated.
True.
Okay, so I mean, this is my personal view. I'm not trying to. So this is what the guys at Dwarfs think. I mean, that's my personal view. So tell me. So you said that the bigger American aggregators tend to only look for businesses with EBITDA of $1 million up. What sort of sizes of businesses do you guys work with?
Yeah, so our kind of sweet spot at the moment is between $500,000 and $5 million in revenue. And obviously, I'll tell you a little bit more about where we make exceptions, and that would be like partnerships, mergers, when they're bigger. But though we're looking for like 20% profit margin on that, so gross margin. So we're looking at, obviously on $500,000, we're looking at about 100K. So yeah, that's kind of where we are pretty strict on as well. I mean, you can have high revenue but low profit margin. It's probably not going to be a fit for us.
Yeah, but by the way, it's not a fit for anybody. I've got to say, I want to keep banging the drum on this one. It's so easy, particularly in the Amazon world, but any marketplace type thing, to get sucked into the revenue game, and it's meaningless. I'm just going to say, if you're listening and your business is doing 5% profit on a €1 million revenue or something, I really feel sorry for you, and please work with somebody to change that number, because it's not sellable. But also, why would you want to own it? I'm just saying. I mean, I just, it makes me cry inside when I see that, because I know some people that they risk so much money, they work so hard, and then they get such pitiful rewards. I'm like, this is not about growing your way out of this problem. You got to change the structure of the finance of your business such that profit comes out the other end. I'm just saying. So bit of a side rant there. What sort of numbers of SKUs do you look for? Because I mean, some businesses have thousands of SKUs in order to achieve their whatever $1 million EBITDA. And do you have a sort of limit there, or do you have a ratio between revenue and SKUs that you look for?
Really, it's less than 200. Ideally. So, I think an optimal business, I'm talking one at the moment, like 40 SKUs, ideal, but under 200. So we understand that, every single business is different, but anything over 200 just gets too messy. It's too busy for us.
And do you have like a revenue per SKU metric or something like that, or even profit per SKU?
Yeah, I mean, look, I'd say ideally around probably $20 to $30. And if you could get above, that would be great. But $30, €30.
Sort of
That,
price. Yeah.
yeah, and
Okay.
then
So what I mean, I suppose, is annual revenue per SKU. Maybe is the best way I put it. I
yeah.
mean, is it like, do you need a SKU to be doing a certain percentage of the revenue, or it's just not worth having, or
No, not
putting you on the
really.
spot with specifics? So you'd have a particular number in your head. Yeah.
Yeah, I mean, every business seems to be different, but what we're kind of looking at really is the price of a product around $30, because and there needs to be, obviously, we're looking at it where we're saying we've got some really amazing supply chain manufacturing partners that we're pretty confident on most things we can shave off quite a lot of cost, but we have to be able to see that they've got that kind of revenue number going on first. Otherwise it may be difficult to make it work. So again, that is actually one thing. If when we're looking at a product and say it's like, I'm going to say maybe $10 or something, or €10, we're already thinking, it's just not high enough for us, and it probably isn't going to be a fit for us. I mean, there are opportunities to maybe shave off a lot of cost, but the likelihood is they bought it from China. I mean, there's only so much you can shave off from China without completely. I mean, put it this way: we're also very, very picky. We do a lot of research on the factories too. Mm-hmm. I'm hearing this from brokers. I asked a bunch of brokers, how many people ask for factory checks? They're like, very few. We're like, we do. We go and we see the factories. We've got people on the ground who do a full audit. And suddenly you're hearing people say, well, you can't, I've never heard of people doing that. Well, it's like, yeah, but we need to understand that if we then double, triple your business, can they cope with that kind of scalability? Or is their factory going to have lots of issues? Are they going to, is their kind of whole setup going to fall apart when we start asking them to send double or triple the stock? And, people aren't prepared for this. So I think for a heads up, that's also something for sellers they need to be aware of. Like, if you haven't really done your due diligence on the factories you're working with or your supply chain, be very, very careful. How many other people are buying the exact same product? Are they selling the personalization product to other people too? You need to understand this, because you can get yourself into a lot of hot water, especially if they've already been selling something to a larger buyer. And we've heard some pretty horrific stories of how larger sellers are just kind of trampling over smaller ones because they've got more money to kind of take it to court. So there's lots of things like that where people get caught out. They don't really think that far ahead, and we do. So we ask a lot of questions around, well, who's kind of making the product, what's their capability, being able to scale this, have you got any backups? If they can't do this, who did you go to before that, and why did you decide to not work with them? Who should we avoid? So we dig quite deep into this, really. But yeah, I think really the other thing, as I said before, is if then we, say for example, someone is listening to this and they are a bigger seller, they are based in UK or Europe, and they are really good at one area of the business, but perhaps manufacturing or cash flow or supply or IT or whatever it is that is kind of really a challenge for them. They realize that they could probably use someone like us to come in and take over that area of the business. This would be a great conversation to potentially talk about a partnership or a merger too. So yeah, more than happy to pick up that kind of conversation.
Interesting. Okay. And people should reach out to you. I think you said LinkedIn or Facebook is the place to go.
Yeah, that's right. I mean, maybe we can drop some links in somewhere, but my LinkedIn, Luke Havard, or Facebook, Luke Havard, or you could also email me on luke@dwarfs.io.
So that's DWARFS rather than dwarves with a VES. Yeah, if you want to pop that in the I don't know if you're able to post in the Facebook comments or the StreamYard comments, then that would be great to pop your LinkedIn profile there. But I mean, basically, Luke Havard, HAVARD.
That's right.
Then they look for you there. Mm-hmm. Yeah, great. Well, there's just a few more questions I want to just cover. I mean, one other thing is there are a lot of different marketplaces out there. So we're zooming back out now to thinking about the sort of building side rather than the selling side. Lots of marketplaces out there. Where are the juicy places to look? You've talked about bol.com. So how would you pick a marketplace for your product or marketplaces? What are your suggestions on that?
I think the one thing that Amazon has done really well is their whole kind of process of selling. They take a lot of the heavy lifting out of it for sellers in terms of bringing the customer to you and how they fulfill the product and ship it and all that kind of stuff. So I'd be looking at marketplaces if possible that kind of they're not going to have necessarily the same capability, but similar. You want ease of use. You want it that they bring good quality customers. You want it that they kind of handle a lot of the issues or challenges that may occur when you're selling. Otherwise, you can't scale. I think there are people who still sell on eBay, but as far as I know, we're not looking at doing that whatsoever because there's just problems that come with that, and there's a different type of customer, and they expect a lot less. So I think the thing that you get with Amazon and you get it with Bol is customers that have money and are willing to pay for good products. Whereas there are other platforms that, if they're really, catering to a very, how shall I say this, cheap crowd, then you're not going to get the same quality of customer and you're going to have issues there. And it's going to be more hassle than it's worth, you're not going to get the scalability. So I think really that's what we always look for. The same with your own web shop. I think it's important to build your own database. That's an asset in and of itself. You should have your own customers that you can continually upsell and sell them other stuff. I remember years ago, in fact, because I have a background in consulting and advising businesses in various different industries, but primarily online, software and e-commerce and areas like that. And I remember there was an e-commerce business we were involved in, and they had, I'm going to say 300,000 past customers on an email list that they'd never, ever emailed. And, what had happened is they just bought the product and then gone onto this email list and been forgotten about. And, this happens more times than you'd believe, really. That we found hundreds of thousands in additional revenue from that email list. I mean, many of those customers were no longer active, or they, dead emails, or they, opted out. But honestly, you can warm up those databases and you can monetize them again. And what's even better is if you've kept the database current and you put into, you implement a really smooth email marketing strategy, maybe using an email like Klaviyo or something like that, I think. And you just really put some thought and care into communicating with those customers and continually, trying to serve them. And that's the way to think about it. It's all about service, isn't it? And how can you serve them better? How can you delight them and give them what they're looking for? Because they're looking for it from someone, so you might as well be you. And so I think that's a real asset, really. If we were to see, we don't see it enough. That's the key thing I'm getting at here. We don't see businesses where they've got a current database that's active, that they really know how to serve well, and they're generating, good revenue from it. I think that warrants a better valuation straight away, of course, in addition to obviously having greater revenue and risk mitigation. So.
Great. Okay. Well, that's certainly, it's an obvious point, but the fact that it adds to the value of your business, i.e., I guess what you're saying is you could have the same profit margin, but the multiple goes up. So that's, it's not exactly free money because you're going to have to put effort into doing it, but it's just a massive payoff. I would say is that that's really worth thinking about. So when it comes to marketplaces, you've already said, broadly speaking, it sounds like you need things that are similar to, like, what are they called? Bol.com. You said it's like Amazon's kind of little brother or something.
Little brother, yeah.
Yeah. So, what are the other marketplaces that you've stumbled across? If you know the specific, I'm putting you on the spot here, but off the top of your head, can you think of a few other ones that would be similar to Bol in terms of capability?
Yeah, no, there's CDON, CDiscount, onbuy.com,
And
ePrice.
I should say which countries are these specific to as well? Let's give people a bit of an exploration list. See,
These
discount is France, obviously, isn't it? But
Yeah, yeah.
where are the other ones?
These are European-based ones, so they're not all sort of operating throughout Europe. Some are, some aren't. But they're not operating. Some of them in the US or the UK. Some of them are only operating in, say, France or Holland or Germany. So I think it's really a case to do your own research and look at, based on it. I don't think it even matters necessarily which country you're based in, because I mean there are people I know who sell from they're in the UK but sell on Amazon.com. So there's ways and means of getting around it. I mean, there are some. I think there will be some that will be more difficult to sell on if you're in a certain country, and that maybe it requires you to set up a business in that country. But I don't necessarily think that's a barrier to entry. Maybe there's someone that you could partner with who's already based there, and you have your skill set, and you can complement one another. But I think it's worth looking into it. But again, have your own criteria in terms of what it is that you're looking for in terms of a platform, and the way you want to run your business. If you need to fulfill it yourself, is that possible? Can you do fulfillment yourself, or can you use a third party? Is it profitable? Is it worth your time and resources and effort? You need to kind of do some research, and obviously that should be common sense, but common sense is not always that common. And I think just digging in really and understanding the financials in terms of does it kind of yield the fruit you're looking for. The reason Amazon is so successful is because it takes away so much of that hard work once you've set it up. Some of these other platforms don't. I mean, that's why we're not interested in things like eBay as well, because it's a lot of it is you have to get other parties involved and whatnot. Again, I suppose in some respects it can be the same with your own website, your own web shop. You might need to use other carriers and third parties to do that. But I think specifically it's understanding also the listings and what language they're going to be in. Do you have people who are able to translate those listings well? That's something we find often too, that people avoid different marketplaces or platforms or countries because they just weren't able to find the resources or the people to help them with the translations of the listings. And we've even heard, people saying, if we had better quality images and people who could help design things. You know what I mean? It's just really random things.
That sounds very weird to me, because I think you could go on Fiverr.com and get that dealt with in about 20 minutes. I mean, some of the people on Fiverr are great and some are not. Really so you're going to have to kiss a few frogs in my experience. But I mean, I tend to use Upwork for things like that. But yeah, it's extraordinary for me, if you've imported a bunch of stuff from China and put your own capital at risk, compared to that, translation and photos just feel to me just childishly easy. I guess I'm not afraid of languages. We both speak German. I guess that helps to break that kind of Anglo-Saxon tradition that we're lousy at languages. At least I assume you speak a bit of German because you're living out there. But it's one of those things that I would just say to anyone listening as well. I would back you up on that to the hilt. Don't let that be a barrier. That's ridiculous. Sorry, but that's so easy to solve. There are specialists out there. Luke or I could introduce you. I mean, VAT registration, a bit more of a pain. Translation, dude, that's a commodity. And so is great images. I mean, I'm not saying really good photographers always cost good money, and so they should. But getting it done in the country specific stuff.
And I'll tell you why I mentioned that, by the way. Sorry to interrupt you. The reason I mentioned that is because we've even ran into quite a few sellers, especially in Europe, that actually they don't all source from China. So they source from in country, or they maybe they started manufacturing the products locally. So they haven't actually had to run the kind of gambit of sourcing from China, and maybe they're not even selling on Amazon. So you would be surprised. Sometimes they're not as technical or as savvy. They haven't had that experience. They haven't had to go down that road of sourcing from China and the importing and whatnot. So it is really extraordinary when you dig into different countries, especially that are not, UK or Germany or America. You'll find that people have done things a different way. So they have different experiences and different, strengths and weaknesses.
That's very interesting. So I guess that if you're coming in, if you're US based or UK based, or you're used to sourcing from China, then you have automatically got a potential competitive advantage. The final thing I wanted to just talk about is, I mean, this is a big subject, but I wanted to just sort of touch on it because it feels important to me. You talk about not everything translates, particularly from, say, Amazon.com. And I would say Amazon.co.uk is quite similar to Amazon.com. It's dominated by a lot of big Chinese sellers and then a lot of big US based sellers. So they look quite similar to each other a lot of the time. But not everything translates, particularly to mainland Europe. So tell me a little bit more about your sort of 50,000-foot view on the sort of types of products that translates and how we deal with that consumer sophistication piece.
Okay, yeah. So, for example, we looked at one product once in the home and kitchen. So it's in the home, in fact, and it was just shelving, and it was just so basic for us. It was in the US. We just said we knew it wouldn't translate to Europe. They'd be like, I'm not paying for that. I could make that at home myself. Why would I pay for that? And they want, they just have a different kind of, especially here in Germany, everything's new and white and sharp and kind of, it's just different. It's different to the UK too. In the UK, everyone's into, well, at least my wife would tell me this, shabby chic, vintage. It's not a thing here. It's not a thing in Holland either. Everyone's into kind of like, just, there's a very different taste. So I think it's just understanding what sort of things people have in their homes. If you're selling to the homes, what products people use in a certain country, doing your research first sounds obvious, but not always, people don't always follow this train of thought. And just understanding that that's not something someone would buy. I mean, there are specific products that I've seen in the US that sell for a lot, and people just wouldn't be interested in buying that or spending that kind of money here. And I think that's because in the US, especially in the US, and it's becoming more like this in the UK, people are they're used to just convenience, and they don't want to go shopping for things. They just wouldn't even dream of jumping in the car and go into a store or something at the moment, especially with COVID and what's happened. But here in Europe, people still are there's still a distrust of the online world. Like Amazon is getting really big, obviously everywhere, but there's still kind of a percentage of people who they don't do much online. I mean, a good example is even the Germans here, that you can't find anything about them. So if you find an Amazon seller, you can barely find any information about the owners. They're just very hidden. They don't have Facebook. They don't use LinkedIn. They don't put their emails. So it's a very different culture here. People are still very distrusting of the online world. So it's understanding what type of products they would be willing to buy online and who is the consumer. It's going to be the much younger crowd. I mean, I know for a fact my family, my mother would buy lots of things off Amazon, and my father, and they're very tech savvy and they get it. The people here wouldn't at that age, in the 60s and older, there's no chance they're going to be buying anything online. So the consumers are going to be much younger here. So they're going to want a different type of product. It's going to be for a much younger market. I mean, there's just I'm trying to think of some examples, some live examples of products that we're currently looking at. I mean, the ones that we're seeing people buying, interesting enough here is there's a lot of people buying like bedding and stuff for the bedroom. So that's kind of obviously it seems to be a niche that's big here. Sports, there's a lot of people buying, and they're younger people. They're buying, sports accessories and things like that. So people in Europe are very, health conscious, and they would happily, spend a lot of money on sports stuff, especially now that the gyms aren't open. Like Germany has been in lockdown for a long time, and there's a lot of people who are not going to venture anywhere near a gym. So they're buying a lot of home workout equipment, and maybe that's the same the world over. But I find from my American friends, they've been back in the gym for months. So there's a different culture going on there as well. So I hope that gives you kind of some of the insight you're looking for.
Yeah, it does. It gives us a bit of a flavour, and I guess in the end, the overall thing. It's like when I said to you, give us some juicy marketplaces, and you said, go and do your homework, which is, I guess, really grown up advice. I mean, in other words, you need to know what it is you're looking for. And if you're not good at fulfillment and you don't want to get involved in that, and I totally get why you wouldn't, then you need to be looking at bowl.com, for example, which does deal with fulfillment, I think, as far as I understand, and maybe not some of the other ones. But I guess similarly, what you're saying about the products is, you got to do your homework and not assume, first of all, that the first news flash is don't assume it's the same as the US the world over, because it isn't. Very interesting insight into the buyer demographic in Germany, particularly because Germany, Amazon Germany, for example, and I guess therefore e-commerce in Germany is actually bigger than in the UK. But as you said, the consumers in the UK are very, very different. I think e-commerce is a very high penetration in the UK, apart from China, which I think is huge on e-commerce as a percentage of the middle class population there, which is a very different demographic again, right, in terms of poverty and wealth distribution. But yeah, I think the UK and Germany are very, very different in a lot of ways, even though they're geographically quite close. And Americans might be tempted to lump them in together. I would say that's a very interesting hint for further study. And in fact, I've had Americans reach out to me recently to try, some of the biggest sellers, to try and get that sort of localized knowledge. And I would say it really helps to have somebody who's literally on the spot, like you are, who's got a perspective on the sort of consumer tastes, because that is something that is quite subtle, and it's hard to do from the outside, right? So that's definitely an interesting point. But nevertheless, this is one of the, again, if you are an American who speaks European, if you like, or a UK person, where weirdly people in the UK nearly always speak French appallingly badly. My mum was a French teacher, so I guess I'm biased. They don't speak German at all, unless they could say, I'd like a piece of Black Forest cherry gâteau. Is probably like the one thing you may have learned at GCSE German back in the day. If you're willing to overcome that slightly and educate yourself, I think there's a massive opportunity there, because where people aren't willing to make a bit of mental effort and you are, for me, that's just speaks opportunity. So to your point about barriers to entry, I guess what we're talking about here is kind of cultural barriers to overcome, like tastes in products and, a little bit of linguistic stuff maybe, but, translation is a horrible skill, guys. By the way, you're so right. So many people are blocked from doing stuff just because of the language barrier. I'm like, dude, Fiverr.com, and, I wouldn't suggest you go on Fiverr. I suggest you hire a specialist, but it's very hireable skill. So
yeah,
this has been great. I really love the, what I've seen, from the perspective of people who's worked with the odd seller who's killing it in Europe. And when I say killing it, what I don't care about revenue. They're killing it in terms of making a profit, which is the number that excites me. And it's great to hear that wasn't just a kind of fluke, and there's a huge opportunity out there. So once again, if people want to reach out to you, Luke, then it's Havard, right? Your surname. So Luke, how do I say it? Havard, Luke Havard. So very temptingly similar to the famous Harvard institution, but not the same. Havard, LinkedIn, Facebook. Final thing to ask you is, what question should I have asked you that I haven't already?
It's good. It's a good question to ask. I like that. Yeah, I wasn't prepared for that. I'm not sure. I think you've probably covered everything that we could have covered during this conversation.
Fair enough. Yeah. In which case, then it just remains for me to say, Luke Havard of dwarfs.io, many, many thanks for coming on the show. Really insightful stuff.
Yeah, thanks for having me, Michael.
Excellent. And that's the end of the podcast, folks. So we'll just wrap up on the Facebook or StreamYard questions. One person just said, how do you spell bowl.com? So it's BOL.com. Is that right? I'm not getting that.
Correct.
Yeah. So yeah, bowl. I like it. Yes. Yeah. Bowl.com. I mean, man, if you just want one opportunity that is underused, 7 billion euros is nothing to sniff at. But, UK a while ago, UK Amazon was 14 billion euros. Maybe in 2020 it was 26 billion. Who knows what 2021 holds. But 7 billion of not too competitive, highly profitable is just vastly different from 20 billion of incredibly competitive and full of Chinese sellers. I mean, I can't stress enough how different it is. I just looked at what my clients doing in there, and I'm like, dude, this is extraordinary. This feels like Amazon 2013, and it's really amazingly low competition compared to Amazon. And you still got competition. You still got to know your stuff, but the opportunity for profit is just immense. I mean, and that's the only thing that counts. That Amazon seduces you with revenue numbers, and that's the first sign of a newbie or a naive Amazon seller, is that they go, "Oh, people are making $1 million a month in this market." I'm like, yeah. That doesn't matter. It doesn't even matter if you can get half of that market. If you're hemorrhaging cash, does it? Is it going to make you a profit? This is the only thing that matters. So I think from that point of view, I think frankly the European marketplaces knock most of the Amazon.com out of the park. I mean, like it's just not even the same league. So I really think it's big.
We were on a call today. Oh man, we should have maybe shared that in the podcast, but I didn't. We didn't get onto that. I was on a call earlier. And we do like a couple of deal calls every week, to review the deals in the pipeline. We got a ton of deals coming in, and one of the other guys, he's special. He just, because I don't deal with Bowl, so I'm only dealing with the Amazon sellers right now. But there's another guy. All he does is deal with Bowl, so he doesn't deal with Amazon. And so he's there telling me, we're getting businesses with 50% profit margin like normally. That's normal.
Yeah, that's not normal.
I'm like, what? And that's normal for them. So it's ridiculous. And so if I was an Amazon seller listening right now, I would be like, what can I do in the next week to set up on Bowl? What have I got to do?
Yeah.
Because to be honest, you could ditch your Amazon business and just run it on Bowl and probably have a lot less. I know it would be crazy saying that because I should say no, keep working and come and sell to us. But honestly, I genuinely, for what's the best interest of the listeners, it's like, hey, if you're having a hard time on Amazon right now and you're not getting the sales you'd like, and you've got a great product, but it's just too saturated, too competitive. Your fees and everything are too high. Look into Bowl. At least Bowl.
Absolutely, yeah. I'm a big believer in that. And the more I hear, 50% profit margin in e-commerce business, by the way, that is mental. I mean, if it's a well-run business, 20% EBITDA is what you guys shoot for. That's not easy to achieve. That's high. You're going to get competitors pushing that down towards the 15% all the time. 10% is not uncommon. 50%, like as the bottom line, pre-tax profit, is absolutely insane. Think about what the gross margin that implies, about 70%, at least 80. Otherwise, you won't achieve that 50. So that's an insane number. I mean, that also says to me that isn't going to last either. So the time to get in is now.
Get in now.
Yeah. So there you go. We're going to have to include that in the podcast because that's too juicy to pass out. But we better say cheerio, Luke, and get you back to making some deals. But thank you so much for coming on live as well. Always fun. And guys, do ask any questions. If I were you, I would be peppering Lou with questions about how to get into Bowl. And if you've got a colleague who's an expert in Bowl, go tell him to get ready to come on the podcast because we want to pick his brains. But great stuff. Really, really love real smorgasbord of knowledge here. Lots to go and chew on. So thanks so much, man. It's really, really great to have you on.
Thanks for having me.